Today's topic is supercharging investor acquisition with data and analytics. We're going to be discussing how to use data and analytics to improve investor acquisition and also to identify trends, improve performance on capital markets and capital raise processes. My name is Geronimo. I am the CTO here at DealMaker, and with me are John Stidd and Andrew Korn, and I'll let themselves introduce themselves. And John, why don't you kick it off with a brief intro of what you do and what your company does? Oh, before we go there, sorry, just a disclaimer that this webinar is not financial or legal advice. We have to do this every time for compliance reasons, and I forgot to do it. So, John, please go ahead.
Thank you, Geronimo. Thanks for having us, and thanks for reading the disclaimer before I spoke. So I'm also under the disclaimer now. That is good. I'm the CEO and co-founder at the Ridge Growth Agency. So we've been doing this for almost 5 years now. Started off in direct-to-consumer marketing, which actually helped us pivot to focus almost entirely on equity crowdfunding, where we can leverage some of those same D2C tactics to acquire retail investors, right? So and then that comes full circle with our D2C, where we'll help brands grow in between their raises. So the ways that we use data are numerous. A lot of them are powered by DealMaker. How we track campaigns, as well as how we nurture people in those campaigns. So this discussion is a crucial part of our business today. So I'm looking forward to diving in with y'all. Thanks, Geronimo.
Great, thanks, Jan. Yeah, we'll dig into that. Andy, please.
Thank you, and thanks for having me here. And also, I'll say thanks for the disclaimer as well. Glad to be under it. So I'm Andrew Korn. Most people address me as Andy. I am the CEO and founder of E5A Integrated Marketing. It's kind of an interesting name, E5A. Technically, we are doing business as that name. We are E5A Funds. LLC is our actual legal name. I got my start with E5A, was founded as an after-tax alpha strategy for family offices, and I come out of the investment management industry. Prior to that, I did work on hundreds of IPOs and aftermarket work within investor relations, and we don't consider ourselves a marketing firm. We are a systematic, data-driven investor acquisition firm, and data is at the heart of almost everything we do. Second to that, almost equally, would be storytelling, which I'm sure John would say the same thing about his agency as well.
Great, thank you. I think you both, it's curious that you both in your intros spoke about data-driven decisions and how that relates to marketing. So I think a good place to start is how, when you think of capital raising and all this retail investment, what does it mean to be data-driven from your perspective, Andrew? Specifically for capital raising?
Sure. So only about half of our business is equity crowdfunding. The other half is other types of investment products, ETFs, mutual funds, hedge funds. We do a lot of real estate, which is now crossing over into Reg A Plus as well. And when we look at in Reg A Plus crowdfunding, we say we do a lot of assessment of the company and the issuer. But one of the first things is data. Who is their most likely investor? And how many of them are there? Are there statistically enough of them that if a tiny percentage actually convert, we can fill the whole offering? My firm focuses on 20 million and above in Reg A plus. We don't really work on smaller offerings. So we need to know that there are literally stadiums filled of investors out of the millions of people that we can solicit and make sure that's right. So, you know, if that math doesn't work very quickly, that there are a large number, that if we convert a tiny percentage of them, that will fill the entire raise, then for us, it's a walk away. We don't want to take on an account where we don't believe we can be successful and the issuer can be fully successful. And if they're raising 20 and we only raise 19, that's not success. So our math is super important in what we do. And that is literally the first thing we do is before even a first meeting is back of the napkin, do we think there's a shot at this?
Yeah, that's quite interesting. And we will be coming back to conversion later, but I think it would be nice for John, from the rich growth perspective as well, talk a bit about what does it mean for you guys to be data driven?
Yeah, certainly. And that piggybacks on Andy pretty well there. So, you know, they focus on some of the 20 million plus campaigns, and, you know, while we have had some on the upper end of that, you know, we also focus, you know, 5 to 20 million, right? So we're looking to, you know, use our ad spend pretty efficiently for these clients, right? You know, you got to nimbly get your way to these benchmarks. And so, you know, the campaign can start spinning off some working capital for these folks to invest back into marketing. So, you know, one of the things that we really enjoy about DealMaker is the T-name system, where, you know, those folks get tagged depending on what campaign that you have. And we have a pretty rigorous setup for that now, where we're, you know, tracking all the way down to the keyword to see, you know, what individual keyword searches on, say, Google, right? Or, you know, a specific ad on Facebook is leading to the investment metrics that we want to see. So both in terms of budget management, that really helps us. And then the ongoing nurturing of those folks. So, you know, we focus on email marketing and how to move people through that funnel, right? Because when we're targeting somebody from a Facebook ad per se, you know, they may not be investing in one fell swoop, you know, for a $1,500 investment when, you know, they were on there originally looking at, yeah, photos of their nieces and nephews and cat pictures. So, you know, we're bringing them in, and then you got to nurture those folks through email marketing. So our ability to look into the funnel and see the different stages that people are at through the DealMaker platform helps us speak differently to people in that funnel, right? At various stages, yeah. Whether they're invited or, you know, confirm their investment, right? So, you know, a small example of that would be something we do for an issuer who's, you know, also a D2C brand, right? Being able to leverage a discount and say, you know, hey, here's this investor discount, you know, you may want to try before you become an investor, just because the product speaks for itself. And, you know, we're only able to do that because we have those insights about, you know, where they are in the funnel.
Mm-hmm. Can you touch a bit on how DealMaker stacks help you split the funnel in different categories? Can you elaborate a bit on that for people that might not be familiar with DealMaker and your process?
Oh, certainly. Yeah, great question. So, you know, as somebody comes from an ad to our landing page and ultimately, you know, does an action like sign up to invest, right? When they do that on our landing page, they're going to start the DealMaker funnel, right? That DealMaker flow. And as anybody knows anything digitally or even handwritten, you know, every step is sort of a layer of friction where you can expect a little bit of fall off, right? And that's normal. So what we get sort of visually, and actually visually as well as in a spreadsheet, which is how we end up using it, right, are these investor metrics, or I shouldn't say metrics, investor line items of, you know, where XYZ person is in this funnel. You know, have they been invited and not yet signed? Have they signed but not yet, you know, accepted? So for in different terms, you know, that would be, you know, saying that you're interested in investing, right? And then somebody gets a little farther and says, you know, here's how much I would like to invest, you know, and then they just haven't yet wired that money. So you want to make sure you're moving people from, you know, step 1 to 2 to 3, and there are certainly more in the funnel in there, but the broad brushstrokes of it would be, getting this person who is already engaged with that flow start, right? Getting them to, indicate a dollar amount that they'd like to invest. And then the third tranche of that is getting them over that hurdle. So we can visualize that in your platform. And the way that we use some of those exports allows us to connect that directly to our email service provider. So, all of these companies send out emails, from some sort of email service provider. We happen to use Klaviyo because of the segmentation that you can use. And when we're able to do that, get, your system talking to this spreadsheet, talking to Klaviyo, we can segment based on, where those people are in those three tranches and say, hey, here's some messaging here, or at the very least, that messaging may not work. And then at least we know, based on open and click rate, and we can test a number of different, how do we get that person in step 2 here to click on an email? And it could be a discount, right? It could be a handwritten note from the CEOs, hey, here are some investment highlights, right? So any number of those things you can start testing, but you can only do that if you have a very accurate view of where people are in that.
Nice, thank you. I want to go back a little bit to Andy's comment on when you get on a deal, you want to make sure that your customer is successful, that your campaigns are successful, so you don't get into business where you can't really help. Andy, from E5A, how do you guys keep track of, you get into a deal, you think the customer is going to be good, it's going to do well with you. How do you keep track and checkpoints and make checkpoints and make sure that anything that needs to be corrected is corrected over the course of the capital raise?
So that's a very open-ended question. So I'm going to answer it in 2 parts. Part 1 is what we call the prep period, from the day we're engaged to the day we go live. And we have an exact process that we bring people through. Knowing I spent years as an equity portfolio manager, everything in our company has a process to it, and a sub-process to it, and a check and balance to that. So we have a way of onboarding. We basically gather a lot of information, we analyze it, and then we do our onboarding workshop. And that workshop can last anywhere from 4 to 8 hours. And it basically it's a methodology to gain all the information we need. It is somewhere between a branding workshop and an acquisition workshop with investment methodology, and investment process along the way. So we're not just looking at use of proceeds, but what should investor expect? What's the promise to that investor? I'm going to make you money. Well, it's very different if it is a income-oriented invested, let's say like real estate, versus it's a major innovation investment, which may have a multiple but no current income. So we need to be really clear on what we're communicating. And then we have a checklist and separate schedule for every component. And there's literally hundreds of components and things that need to be made, ads, then sizing them, getting them set up, and then for tracking. Once all the tracking's in place, then we launch. Of course, there's a media plan and a basic media strategy. There's month 1 spend, there's month 2 hypothesis on spend, because month 2 spend will be completely related to what happens in month 1. And we basically have a 4-part mantra. If you were to kind of wake an E5A staff member from being half asleep, they would probably instantly say test, measure, refine, optimize, because we say it so many times a day, we basically say it in our sleep. So everything we do is a test. And people will say, you're testing, you're measuring, you're optimizing. We've been at this for 3 months. Why are you still optimizing? The results are good. Well, results may not be good in 30 more days. The seasons are changing. The mood of the country is changing. the markets are changing. And yes, the public markets do affect the number of signs per day. It's, we see a little bit of correlation there. Is it exact causation? I'm not sure, but the correlation is there enough to have it affect our work. So like John, we look at one campaign, but there are what we refer to as the investor journey, and we have that broken into 16 very distinct segments. And essentially, we're building a new audience, moving from step 1 to step 2 to step 3, and we're going to message them differently. The medium we use may be different. And how forceful of the message we are may be different. So our calls to action might be soft, they might be hard, they might be both, and we're just testing them. So the same creative and same messaging, and the only test is the call to action. So there are so many variations to that. It's an awful lot to keep track. And again, we have a process for that. So the optimization is something, and people will say, the week before we're going to close the entire Reg A+, are you still optimizing? Yeah, the answer is yes, because we don't want to leave anything to chance, and also we like oversubscription. Oversubscribing and offering is a really good thing for selling product. Building more data to then take everyone who didn't invest and perhaps put them in the next one, or taking those data pools and using that to sell product if it's consumer products. So we have exchange traded funds that we've been marketing for 5 years, and we are still testing, measuring, and refining and optimizing. What I can tell you is in February 2020, when things were just going along really well, things changed a little bit over the following month when we had our lockdown, and we ended up changing virtually every ad we had on the web, Facebook, social, everywhere, all of our emails, our offering pages, because the mood of the country changed so much. And even our statistical measures and benchmarks of what we expect to get change at least quarterly. So there's an awful lot. I could actually spend 2 hours describing it, but I will not bore your audience.
No, thank you. That's I think the common theme between you two guys is that there is a lot of measuring and testing different things and gathering data from different sources. And anyone that is on the analytics, data-driven mentality are struggling to aggregate data, put data from different sources, different structures into one place. That's something that we at DealMaker take really seriously, and we're trying to build a lot of this backend infrastructure where behavioral data matches or gets correlated with payments data and all sorts of deal information that we can find out there. What are the challenges that presents that data aggregation from your perspective? Like when you're gathering data from, say, Facebook, Google, LinkedIn, DealMaker, and maybe John, you can start this one.
Yeah, certainly. Some of the troubles there around recent updates to iOS, which more significantly impacted Facebook there, where depending on the type of data that we're gathering there, what that could be retargeting information, which is just pixel based, or some more first party data, which like email addresses, right? So in terms of retargeting, right, it has made things more challenging as you drive people into that funnel and the attribution of that. So we look at a lot of things in last click in Google Analytics, which is essentially a phrase that just means it's very stringent. It's only what Google Analytics can track. and per platform. So a lot of people are going to drop off in that, whether tracking falls off, they use a VPN, or with the iOS update, all of our metrics from Facebook are just a little bit more shaky in that. So relying on those retargeting funnels, because as Andy mentioned, how do we move people through the funnel? You're talking to people differently at these different stages. So now there are just like some slightly blurred lines between those stages of the funnel, which do make it harder to track things specifically. But I would say a lot of that data is still in good standing and fairly sturdy, enough so to make some decisions on and continue with the optimization process. Where that comes in for us for email is just we look at email as a really important benchmark, because then we have a more one-to-one relationship with them. And if the initial data is a little shaky on where they came from originally, right? Because if we can acquire an email address more cheaply from partnerships or Google ads, right, we'll probably lean into that a little bit more. So again, that first step of it is, where did they come from initially? And if that's that data is a little unhinged, it's harder to make those judgments, but you do still have some broad brushstrokes of information that you can use. And now, frankly, it just requires, the shakeup really messed up people who, were only used to looking in platform at data. So only looking at, Facebook metrics versus, comparing that with last click in Google Analytics. So now it's just looking more across the platforms, right? So, in platform in say, Facebook Ads Manager, Google Analytics, and, ultimately cross-referencing that with the goldmine of data that we get from DealMaker in terms of those T names, right? Where that's most important. But again, there will be some fall off in that where not everybody gets tracked, but at least you have a general North Star. I may have gotten off topic there. Did that answer that?
No, I think that makes it. What I wanted to get your view on is how this gives more confidence to the issuers that are looking at all these discrepancies in data and saying, how are we going to do this? So that sounds like you guys have a system to integrate and look a bit more at the big picture.
Sure. Yeah, it's a little bit twofold, and piggyback on something that Andy had mentioned, right? When you're, talking about these benchmarks and the data that you have, it's, this looks good, we can scale this up, right? It does give the issuer a lot of confidence and context when you can show them, hey, here are the keywords that, people are converting from, because we'll work with people who are, at all different stages of digital marketing know-how, right? From, have run ads themselves to, never seen it before, right? But when we can, supply them, very crystal clear, it's, hey, here are the keywords that we're bidding on, and we can see, this person, invested $30,000 from this keyword, and we've got a, also for that keyword, we see a very low cost per click and a high time on site, right? Let's move with that, and even create content based on that. So what is that keyword? That sounds like a topic that we can use for retargeting or blogs or that sort of thing. So yeah, I would just add that to the end of my long-winded answer there.
That makes sense. Andy, from your perspective, how do you give confidence to the issuers that are coming to you, maybe scared because they have never run these kind of campaigns? They don't know how these things get measured. What would you tell them to kind of ease that involvement?
So,
sure. Oh, sorry. I'll stop. Andy, please go.
No, you can answer every question. I'm totally okay with that.
I'm done. I'll go on mute.
So we have a dashboard that we set up and share with the client. It gets updated daily. And we looked at real-time updates, but first of all, there's no such thing. Google Analytics has delays, which is different than Google Ads delays, which is different than GDN delays, which is different than Facebook delays. And then if you add in all the email and CRM data that needs to go in, and then DealMaker data, there's a lot of delays. So we prefer to do snapshot data. And also, if we have a client who's interested in real-time data and once a day updates are not enough, it's probably a problem client. That's probably a red flag on that client. And I'm glad John's laughing at that, because not that much happens hour by hour. A Reg A Plus is a marathon, not a sprint. And what we want to learn in the first month is different than the second month. But anyway, let's get back to that data aggregation. So I mentioned, I think, when we were chatting before the webinar started, that we're on every continent as a country. As a company. And we in Africa actually is where we do all of our reporting and data aggregation. And we do it there because there's a lot of very data-oriented people who aren't necessarily, a lot of them are underemployed. So we have been very lucky and found people where they do all our data aggregation and updates into our dashboards, and that is done by 9 a.m. I'm sitting in New York City. So by 9 a.m. is early for West Coast people, where it's 6 a.m. and I'm able to look at that. It's generally done. I get an email notification account by account. I'm usually looking at that starting 7:30, and then I've got my media team. I've already harassed them completely before 9 a.m. So that's a really nice thing, because we're able to do a lot of optimization. I'm not the only one who's doing that. And sometimes my harassment is, hey, I'm looking at this and seeing this. What do you think? So there's a bunch of discussion that goes on, and all that is in prep of our morning staff meeting, which we do 5 days a week. So especially having a team around the globe, it's really good to get together on Zoom once a day and run through all the issues, and if there are any unusual deadlines that we need to address. Anyway, so we like to pull everything into a dashboard, and even then we're not looking at every piece of data on that dashboard. We share that dashboard with our client. Of course, if I want to see something deeper, I'm permissioned to go into Facebook or whatever it is and look at that. And here's another weird thing about us. We only use our clients' accounts, and our clients pay for that media directly. So they can go into Facebook, they can go into Google, they can go into anything they want and look at it as well, because we don't mark up media. We just charge a simple flat monthly fee. We don't make an extra dime if they spend more or spend less. Our goal is to be the lowest cost of capital possible. And we don't feel that marking up media should be a part of that. I know that's a tangent. But so I guess the data aggregation question is answered by, we do it super early in the morning through what I call time zone arbitrage, by having it done by people who are awake before I'm awake, and that is shared with the client. And we just, one quick thing to jump on, we barely look at last click attribution. We look a lot at first click attribution, what got them going into the nurturing, as John calls it. And we use slightly different nomenclature, but I'm happy to share John's for the sake of not having audience confusion. So we like to know the original source of everybody, down to the ad, the size, the placement, the channel, etc. And then we do look at last click attribution, but for us, a lot of it is email, because they've come into the CRM, and we're able to, of course, we are tracking back to that first click, but then it's coming through either an email through the DealMaker system with all your auto system, or it's coming through ours, which are more marketing oriented. So, keeping track of everything, though, that is the name of the game. You can't make data driven decisions without great data. And I want to get into the great data question, but I know I've been talking a long time, so I'm going to back off for a second.
And there is a question on by one of the participants about your Africa. I think it's worth you touch on that. Is that your own company or is outsourced? And if it's outsourced, how do you keep oversight on that?
Sure. So from a legal technical standpoint, it's outsourced. We pay a company and then the company pays our person. Our person works exclusively for us. And we're about to add a second. And we do that for HR purposes and also currency conversion and things like that. So, basically it is an employee. They have an email address with the company. We treat them as an employee. We regularly get together. We're not a let's get together for drinks company. Let's get together for really high-end pastries company. And unfortunately, we've not been able to invite him to those events, but we're working it out where we can ship him something.
Great, thank you. I wanted to switch gears a little bit, not too much, still in the social media space. Having been on this retail capital raising world, how do you guys think the social media advertisement and marketing that is now pervasive everywhere has changed that? And John, what, from your perspective and rich growth in the last few years, what do you think are the trends on that?
Sure. So, specifically with paid social, so Facebook and Instagram, that sort of thing, any of these marketplaces that, their entire revenue model is democratizing the ability to create ads, right? So, any small business can get on there. I knew we were in trouble. It was, probably a year or so ago now. I started seeing ads for, like high-end luxury cars and that sort of thing. So it's, you get the big folks in the room who, they don't care about first click or last click conversion. They just want to serve, impressions so that 10 years from now somebody will buy like a Jaguar or something like that, right? So the prices have certainly gone up, and that's based on those platforms being open and democratized where anybody can get on there and create an ad, right? But so that's the problem. The solution for that is thinking more artfully about the story that you're telling and moving people along in your messaging. Andy talked a little bit about this, but speaking to people differently at different stages of that funnel. So how do you get them to the website to capture their email and then tell them a more long form story, right? So thinking about the stages of the funnel, but also the creative that you have on there. You need something that's thumb stopping, right? So if somebody's scrolling, you need them to hit pause there. And sometimes it can be different for each client, right? That could be a really well produced video with a voiceover, or it could be more first person sort of founder just stream of conscious, like letting them his thoughts, right? Or their thoughts. So part of that is upping our game on creative and more testing, right? Because it's not just producing really good video content, which our video editor can do all day, right? Sometimes it's thinking outside of the box. It's what else can we do on there creatively to differentiate? So you got to differentiate for creative copy and the story that you tell, and moving people along that, but also explore new platforms, right? So we've been pushing into TikTok and Reddit, as well as using video platforms like YouTube more, which again, to Andy's point, can really help you move somebody through a story, because you can do all sorts of segmentation. Have they seen X video? If not, show them this video, right? So really like walking them through a series of the narrative that you want them to see. So in summary, I would say adjusting copy and creative on the platforms themselves. thinking about how you're nurturing those people, and then testing new and different channels, whether that's, you know, allocating more spend elsewhere, off of paid social or different paid social platforms, you know, TikTok and Reddit.
Yeah, that's super interesting to me. Like 2 years ago, Reddit, or maybe less ago, Reddit was nowhere close to something where people would go for investment advice, and then we have a bunch of different trends there. Andy, are you guys also working on those platforms, like new wave platforms like Reddit or TikTok?
Yeah, so we don't really view them as new platforms. Reddit's been around a long time. The question is can you reach the right audience? So the whole thing comes down to the right message at the right time in the right place to the right audience. And it all starts with who is the right audience. And if you want to be where those meme stocks are, there's no paid advertising there. So you would then need to go in and participate, and you need to participate with credibility and authenticity. And that takes an awful lot of time. And that's not something we've been willing to do. We do advertise on Reddit based on demographics, and we also retarget on Reddit, which is just based on audience that's being built by people who come to the offering page. We've looked at TikTok extensively. All of us play on it. We have not used it for a Reggae Plus yet. A lot of that is demographics also, depending upon, you know, if it's a consumer product, Reddit may actually work out well. And then also purpose. So not every ad we produce is to get someone to click the invest button and complete their investment. Some of the ads we produce, like when we're designing for Instagram, it's a touch point. It's not necessarily going to get that last click. It might get the first click. More than likely, it's going to get a middle click on that investor journey, or it's just going to be a reminder for them, oh yeah. So we love to kind of get into investors' heads of, yes, you know this company, this is a company you can trust, this is a company you're getting familiar with. Yes, I want to invest. I'm going to invest. I'm going to complete that investment. So that doesn't happen with everyone. Some people look at it, see it, click, and they go and complete their investment. So understanding that humans are highly idiosyncratic, they move at a different pace, they move at different types of journeys. The question is how can we systematically be there to accommodate these different behaviors and different patterns? And that's something that our entire process is basically designed around. Did it take 8 different touch points to get you to complete your investment? Did it take 16 or did it take 2? And all those are good. And then I quickly want to go back because someone asked about data verification, having someone in Africa looking at our data. So I led a team that's developed the index behind 6 different exchange traded funds. And I drove my analysts just as crazy there as I do being back in marketing. And all the time look at numbers and say, that's not possible. It's a standard deviation beyond where it could be. Let's verify. And once in a blue moon, the old man is wrong, but most of the time, right. And also when it comes to things like looking at all those different audiences that we're building up and down that journey, that audience verification is done twice a week internally. So, there's trust, there's accuracy, but then there's also verification. So that's something super important because you don't want to make a decision based on something that's not accurate. So.
Totally, yeah. Thank you. So I wanted to also spend some time getting your view on the privacy and compliance theme. A lot of topic, a lot of people, a lot of issuers are concerned about the the investors' information and how it might be shared with other people or not. At DealMaker, we make sure that the investors belong to the company and no one else, compared to other platforms where that's not the case. From the marketing and investor acquisition perspective, when you get those investors for your customers, are those like how DealMaker works differently than other platforms out there that take the marketplace approach? I don't know who wants to take this one.
I'll jump on that one. And I have less experience with DealMaker than John does, but we make a few assumptions, and one of them is that none of it is our data, that it's all the client's data. And there are things we want to know to do our job, and then there are things we don't want to know. We want to know how many people are using credit cards. We want to know how many people are ACHing. And then we may, with an individual investor, want to know that question too, because especially north of $5,000 on an individual investment, we want to see that those are not credit cards, that those are coming in ACH. It's just the better, quote, the better way to do it for the investor. So we want to see that aggregated. So we are blessed that not only do we get to work with you and Aaron, but we have a absolutely trained killer project manager in Robin, who makes sure that we don't see any personal information. We've never seen a social security number or a credit card number or anything like that. And we can ask for very specific data queries and get answers to that. I also really like the back end and what we can see, which is all permission based. And you guys are really good with the security on that. And we go in and we actually copy that and then update our, that goes right into our reporting sheet that we share with the client. That's done in the US, and that is actually done by our head of project management. So she does that most days around 8 a.m.
And just to jump in on that, similar to Andy, where all of our clients also run their ads through their own platforms. We don't take that markup, but it also ensures to them they own that data, right? This is yours. We don't use that as a custom audience list later to remarket or email new people from a new issuer, because there are folks doing that sort of thing, right? I don't think that's the best thing to do for any investor list. It's where it can really exhaust that, right? So that's not how we do it. So it does provide some confidence there when they own the platform and the data themselves. We have to see certain things where they are in the funnel to make educated insights on what to do with budget and how to move people through that funnel. But for the most part, it's a good bit of assurance to the issuer. Hey, this is your platform. You can see our team in here, but after this campaign is over, we part ways and we can be removed. Ultimately, you own all of this data, and we don't use it across different campaigns.
I wanted to jump on the second half of what you asked, which is compared to the dedicated platforms. So we specifically will not work on a offering that is on, let's pick on someone, Start Engine. So why won't me or my firm ever work on something that's on Start Engine? And I'm going to contradict myself and say, occasionally we will. So if we are doing something and they want to co-list on Start Engine so that they can go after the Start Engine audience, we're all for it. We'll help them create the page, we'll write copy, etc. What we won't do is send them any traffic. And the reason is that we don't get to put any coding on any Start Engine page. Start Engine is completely closed. They don't like outside marketing firms. They don't share data with us. They don't allow us to tag pages. We can't track anything. So it's not in our client's best interest to ever send any traffic there. That's basically goes with most of them. There are some exceptions to that for individual issuers, and we'll see if we end up working on something where one of the big four said, oh, we'll open it up to you for that specific issuer. But the rest of it is we only like to see a co-listing there. It's not someplace we're ever going to drop traffic.
Yeah, and I think it's worth mentioning that DealMaker, you can bring your own tracking pixels from LinkedIn, Google Tag Manager, Google Analytics, and track your conversion events or Facebook, and have that in the DealMaker site. So when people completed their questionnaire or went through certain stages. So that's I think it's pretty important functionality we offer. We are approaching 12:50, and I think we can wrap this up with a question about where do you guys think the future is going in terms of data and analytics. There is a lot of, well, there's been a lot of hype about many things lately, but machine learning is one of them. And are your firms in any way looking at tools with machine learning or artificial intelligence to enhance your processes?
So that's important to us. A lot of the platforms themselves have really progressed with some of that, right? So Google Analytics has their G4, which enhances data and helps with first-party analytics. We try to walk a fine line of, using a bunch of machine learning and algorithms on things to, artfully crafting a story and providing that personal touch, because you truly never know what's going to work on there. I can see us getting to a point with, the back set of data that we have, putting some machine learning over top of that to help us scale budgets more efficiently on top of that. So those are always tools that we're looking at, particularly with a back set of data that we have, across all of these different channels to provide some additional insights. But I will lean towards the more human element, which is, part of our ethos of keeping Rich Growth Agency fairly small and boutique in terms of the overall number of clients that we work on. So definitely see how trends are going that way, but I think there's a mix to it that people have to have.
So if everyone sees me jumping around, they've also heard my dog barking. So I'm trying to get her to stay quiet. Sorry about that.
Excited about analytics.
Yeah, well, she is excited about analytics. She's a very data-driven dog for sure. Anyway, always on the hunt. So I'm going to kind of answer this differently, and just want to also say how much I respect John and everything he has said today. It is really good to hear other agencies who really know what they're doing, and we need 4 or 5 more of us. So to take care of the number of issuers out there, we only work for a very small select number of clients, and we're extremely picky about who we work with. And we hire our clients as much as they hire us. So I wanted to get into this part of the data discussion, is we assumed that third-party cookies went away about a year ago, even though they haven't. And essentially, custom audiences is the bulk of the way that we work. We've got literally a small army of people who are looking for, we've got a tech investment. So let's look at all the kind of old-fashioned tech companies where they don't have deals passing by their desk. Let's find every single person from manager to C-level. Let's find their email address. Let's find their personal email address. And all that is discoverable. Everyone has way too much information out there that can be grabbed, and then let's make a custom audience of that. And we do an enormous amount of creating these custom audiences. We have spent 18 months only on angel investors, which means all of them are accredited and have invested across a wide array of types of investments. And then we look for people who are most likely or have very specific affinities. And we spend an awful lot of time doing that, using the targeting tools within Facebook and DoubleClick and tools like that are okay, but they're still fairly wide. They're more shotgun than rifle. Something John said earlier about spending money wisely, the only way to do that is to show the ad to someone who has a high probability of conversion. So we spend an enormous amount of time putting together that and then understanding where they are, if they're on Reddit or if they're on TikTok or Instagram or Facebook, and then context. Like John said, if they're looking at pictures of their niece and nephew, it may not be that conducive. But it might be another touch point as opposed to a last click or a first click. So we look at that and also look at impressions and click-through rates, not for, that efficiency, because a lot of that we're paying for clicks anyway. It's also, are we gathering the right share of mind on that? And then that time on page also is just so important. You have to eliminate all the people who've been there for a second and everyone who's been there north of 10 minutes, because odds are they walked away from their computer. We've never written anything that compelling that they're going to sit there for north of 10 minutes. So and that's a little dose of intellectual honesty, which goes a long way in this business as well.
Yeah. Okay. Well, thank you. I want to add that on top of all that optimization that it's happening pre-funnel, when you're trying to capture or find the audience that is going to convert the best. Within DealMaker, we're also working on tools to give the issuers to keep those highly probable investors on track to conversion. So we're using data to support investor relationships, teams that are trying to get those people that are already in the funnel to get through the finish line. We're very close to time, and we have a question from the audience. I think we can take a few questions in the next 5 minutes. And Paul Edwards is asking, please give us an example of optimization of a media message based upon quantitative findings. Who wants to take on that one?
I can jump in first. So something like that would, if we look at our email funnel, right? So, somebody comes to the landing page, they'll sign up, giving them, continuous emails, right? So that's, specific to the company and, what order we talk about those things in. But an example of that, that's more prescient, taking that, so looking at an email that has a very high click rate, right? And we see a lot of last click conversion in the T names from DealMaker associated with those emails, right? But, that's only a function of how many people open that anyway. So, it's a very high indicator to us that that is compelling messaging. So we want to take that email subject, right, and use that for retargeting ads as well, because clearly it's driving people to convert. So as they're lower in the funnel, that's something that we want to show them. So retargeting, they've come to our website, they've interacted with it in some way, right? How do we move them along? Because again, not everybody opened that email. Not everybody even saw it, right? It's, everybody's inboxes are pretty crowded. So how can we, take an indicator like that says, hey, this is compelling content that helps push people over the hurdle, and where else can we put that to reach more people that are in that stage, but just, maybe haven't seen that sliver of marketing. That's a concrete example, but you can take that and apply it anywhere. Use that for a blog and land people on the page and talk more about that, or have a one-off webinar about that subject if it can fill the space.
Sure. I'm going to give a slightly more multivariable response. So we'll be running 2 or 3, and I'm going to use Facebook as an example. We'll probably be running 3 different campaigns simultaneously, using 3 different data sets. So it's all first-party data. We're running the campaigns. We tend to run 5 different sets of messaging when we launch. So in the old days, a million years ago, we would come up with the campaign, we'd pitch it to the client, get them to sign off on it, and get it through compliance and run with it. We don't believe that that's a good way of working. So we'll come up with these different campaigns, and here we go with complexity. We're looking for quantity and quality. In the beginning, we want quantity. We want to get people to self-select their interest by clicking an ad and making it all the way to the offering page. And think of the feed of that, especially if it's a mobile click. And then they need to be there north of 30 seconds to really be someone who should be counted. So once we've done that, did they convert? So now that's the quality metric. First quality metric, did they watch a video? Did they download something? Did they look at news? But then did they convert? So the point of what I'm saying is that ad group 1 may work well with Facebook campaign A, but not work with B or with C. So we will completely optimize that messaging based on which sub-campaign they're in. And then as soon as we have optimized the others out, we were already creating new ones to compete with that, based on later in the funnel information, kind of like what John said, and also just based on what we learned from what didn't work and what did work.
Yeah, that's I think those are great examples. All right, so we are almost at time. I want to thank you too for joining us on this webinar. You're some of the best out there, and we're very proud to be partners with you. And thank you for sharing all this important information with issuers and people that are in the audience. Yeah, thanks everyone for joining our webinar today.
Thanks for having us, Geronimo. Andy, nice speaking with you. I appreciate it.
Thank you. Thanks for having us.